Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here on January 26th getting ready for a daily Forex market analysis for the upcoming Monday, January 27th and the week ahead. And we're going to take a look at the major currency cross rates to see what's going on and see if there's any potential trading opportunities, which we do know there are already some that have started to manifest. Alright, before we get into that, let's just go to our disclaimer real quick to remind you that this webinar is for illustrative purposes only. And with that, we're going to go to our live screen where we already have the Forex-Trading-Unlocked.com website pulled up, and we already have the workstation page here already from the menu bar already pulled up. And here we're going to take a look at our economic calendar. Now, one thing to note is that besides the fact that Brexit deadline is January 31st, this week, on Friday, we also have a series of big economic numbers across the board, mostly impacting the EU as well as the US. So real quick, we're going to fly through this a little bit. On Monday, for Germany, we have the business climate and expectations number coming out. For the U.S., we have new home sales. So we're starting off with just some minor economic numbers, but then we get into Tuesday, where we have durable goods in the U.S. We also have consumer confidence. We have CPI for Australian dollar. We have consumer confidence for the Japanese yen. Then we get into Wednesday, where we have consumer sentiment for Germany. We have housing price index for the UK. We also have what else is also pending home sales for the US. So these are all a series of medium range economic numbers that are coming in. And then we have in Japan also on the 29th is the foreign investment. That's a kind of a big number to watch. And then we have on Thursday, we have a ton of numbers coming out in Germany. We have unemployment numbers. We have a bunch of CPI number. As well as we have EU numbers. So we have consumer confidence, economic sentiment. These are an unemployment rate. So there's some major numbers that could stir up the euro as well as some of the European currencies. Not to mention we have Brexit. Normally you would think we would have a sideways trade, which we'll see how these are manifesting. I think that's only going to be in the pound. And then we have some numbers you don't have to worry about at all. For the UK, we have the Bank of England. It meets at the end of the week, and they have already said they're not doing anything. They're going to wait for Brexit to be over, and then they'll start to go back to policy. But right now, they said for this week, there's absolutely nothing they're going to do. They're not touching the rate, so no one has to worry about that. Then we have German CPI also. And then we also have some GDP. Let's see, we have GDP for the U.S. And then let's see, what else do we have? We have for the Japanese yen also at the end of the week, a lot of big economic numbers. So all the heavyweight numbers are on Thursday, as well as going into Friday. We have retail sales in Germany, the last of the European numbers. And that will be at least a calming of the storm before the Brexit begins. And then Friday really is pretty much over until we get to also some EU numbers, the GDP numbers as well. And then we have the core, PCE price index and the employment also number at the end of the week also for the U.S. and the Chicago PMI and the Michigan sentiment, which those on Friday with a empty closing market where most of the world is done, unless they come out. Don't think you're going to get probably much of a reaction off of those, but we'll see what happens. So this week there are a lot of economic numbers. Most of them are mid-range. Let's see how the dollar index finished the week. You can see that it made higher move highs. This bull is targeting this upside level up here right around the 98.40 area, kind of like falling just shy of this high up here. I think that's where you're going to start to see a lot of resistance for the dollar index, although there are reasons for the dollar to gain support. So we'll have to see as we get through Brexit on this week. I think you're going to see a little tightening of the pound. So dollar index strength is might have a little bit of a rough time maintaining this bullish posture unless the euro starts to fall apart, which there are some signs that some things may start to manifest in there. But right now we have to look at this bull right here, that the dollar index is pressing higher move highs. And as you can see, where these light green lines right here, these pivots here at 97.3 down to 97.39, This is pretty much our neutral range, keeping the dollar index higher to neutral. Only a failure from 97.39, as you can see here, puts us back on edge, targeting this 97.08 area, and definitely trading back here with the dollar index in flux there. If it starts to slide back on support here, most likely what you're going to have going on is a rally going on in some of your major currencies like the pound and the euro and a bunch of other markets. So I don't think we're going to have a complete trend like that, just because of the fact that we have a divergence now going on in some of your major currency crosses. So as a whole, they've been trading together, a lot of the major currencies except for two, and now we're starting to see a divergence of the euro from other currencies as well as the dollar in the way that it's been trading lately. So let's take a look at the very first market here, which will be the euro US dollar, and see what kind of trade is manifesting here. So while the dollar is gaining strength, it has definitely helped to put pressure on the euro, and as you can see, the euro has definitely fallen on support over the last few weeks, especially since the year has begun and the month of January has been going on. It's been basically a negative trade for the euro for the most part, especially as it ended on Friday, badgering support here. So as you can see, we have a head and shoulders top that also has occurred. This market has been trending higher for months and now is set off of a minor head and shoulders that is now questioning the integrity of the overall bullish trend. So it could be just neutral, neutrality that's setting up, a neutral trend. But most likely it looks like there's a lot of pressures going on for the EU. One, you have Brexit, which is occurring this week. You have the woes of the Italian government and debt market that's also starting to seep back into the EU. We have all these medium economic numbers that are coming out for the euro this week. And if they don't impress, I think that you will keep the momentum to the downside, and the bears have a good chance of getting back down towards this 109.31 downside target, which is for this head and shoulders. So this is a sell signal from this pattern right here that was triggered a few sessions ago, but now has definitely started to show that it's confirming that this is a bearish market right now in the short run and the medium term right now, and is heading on support. So we haven't opened up yet for Sunday night into Monday's trade, so we'll see how it happens later on today, but right now this is where the market has left off, and the momentum seems to be in the bulls or in the bears' hands, targeting this lower support band here. Now remember here, this market has been trending higher for months. As you can see, it took it out 2 sessions ago, so right now it's definitely looking like it wants to badger support some more. So we're going to see how this manifests going into the week, but right now we are bearish the euro US dollar. If you are already in a trade, it looks like you're on the right side of it right now. I would just maintain your stops, keep them, watch these last lower move highs from a few sessions back. Anything above $1.11 here puts this market back into a sideways to bullish posture. So I'd be very careful being short against that, anything above that. But as far as trying to buy this market right now, unless the dollar index really starts to puke out and starts to head south, I don't think you're going to have anything of a lift to the euro US dollar over the next week. I think you're going to see a continuation of this trend. You may see some relief on Sunday into Monday as it digests the recent slide, but as a whole, I think you're going to start to come into a choppy to lower trade for the euro US dollar going forward into the week. So let's look at the British pound US dollar, which is also the main ingredient to Brexit. So here we have the Brexit deadline whatsoever. Now this is the market that's going sideways. This is the one that stands the most attention to this. Obviously, it's the UK leaving the EU. And I think as we head into Friday, the odds are very, very likely that we're going to maintain a sideways posture. As you can see, the market has been a bull for months. And overall, as you fall below this $27.55 pivot here, I think this market stays higher, and definitely in a sideways to higher trade for sure, at least for the next week or so as we cross into Brexit. And then as we get out of Brexit, I think you may start to see pound strength versus the euro. In fact, that's a good thing. Let's look at the euro versus the British pound, because euro strength and euro weakness is something that we really need to take into consideration. And maybe if I put the right symbol in, we would have the right chart. So euro GBP, here we go. So here we go. This market has been trying to bottom, it looks like, but still is riding support. So the euro is very weak versus the pound. So now as we go back to the pound, US dollar, we know that in the dollar index, the pound actually has some strength, but the euro is definitely something that is waning. Now, since we have these woes with Italy that are starting to sleep into the market, let's look at the US dollar Swiss franc trade. Now, this market has been a bull against all the currencies predominantly for quite some time now, and it still remains a bull. Right now, it's just kind of correcting a little bit higher. So here's what we're going to look at here. We have the last higher move low, it's 96.62, and this last swing high at 97.29. These green pivots right here, these are our directional bias, and it looks like right now the bulls are going to make a press at resistance and try and pressure new highs as we go into Brexit. It stands to reason that, especially since the EU is losing the UK and Brexit is moving forward, that the Swiss will gain strength against the euro, and as well as the pound versus the euro in the short run. So euro strength is definitely going to aid to Swiss strength. However, there's been a lot of flight to quality lately, and the Swiss, even though it's been a bull, it's been a raging bull against the dollar for a while. So right now it looks like this is a short-term corrective move, so I'd be cautious looking for this to be a change in trend. I think that this is a short-term move that, especially right now, we have a chance at opening up the week and challenging this upper green pivot at 97.29, and then taking it up to make a run at this 97.61. If we can breach this resistance here, then I think it's going to be a grind higher as we go into Brexit and to make a run at this 98.38 upper resistance level. At that point, I think we are completely out of gas, and you're not going to see any more momentum on the upside, and the Swiss bulls are going to take off. Because remember, the overall trend has been lower for a while. It got rejected at parity. There is a flight to quality going on in the currency markets, and as the EU starts to have these bigger economic and also legislative issues going on, especially with Italy, there's going to be instability in Europe, in the European currencies. So the strength is going to come, obviously, flight to quality in the Swiss, and then also the dollar index, unless it really starts to gain momentum to the upside. If this right now is just a corrective rally on the for the dollar index, as that starts to fall apart and turn back towards the support levels, you'll probably see the Swiss franc all of a starting to rear its bullish horns once again, and start the the U.S. dollar Swiss franc trade will start to continue its trend lower. So right now we're looking for a short-term rally in this market, but we're being very cautious, especially like it's right now, as far as we're concerned, it's in a bearish market, in a corrective rally right now. Okay, so that's that market. Now we're going to jump over to the US dollar Japanese yen. And as you can see, we have these pivots where resistance have become support, and right now here at $9.73, this is going to be our upside breakout level. Anything above there, we have targeting this 110.5 up to a 112 even, actually, over the longer term. The US dollar yen is in a bull market, has been in the bull trend for quite some time. It's just having a little tough time as we are right here at resistance. And irony of it all is that the dollar index has been stronger, and now here the US dollar is going negative against the yen. Very crazy, because no matter what, this market has been very bullish versus no matter what the dollar index has been doing, the US dollar yen has been trending higher and pressuring new move highs. Now, with strength in the US dollar like we have had, we're starting to see a little weakness in the US dollar Japanese yen. So the question is it the beginning of divergence, or is it not? So we already know that whereas the pound and the Swiss are probably going one way against the dollar, while the euro may not be able to hold itself and be strong if the dollar is weak. The yen, it looks like maybe starting to go back onto a page that's different. Whereas before, when the dollar index, no matter what it did, the US dollar yen was just rallying. Now it seems like the yen might start to fall a little more freer in floating in how it goes trading against the US dollar. Possibly because the US-China Phase 1 deal had been signed, and now things are going to start to stabilize also in the Asian environment. It may give some strength to the yen that was not there before. We'll see. These are fundamental things that we have to see how they start to pan out, and in 1 week doesn't make enough indication. It's going to be something that's going to take a couple weeks. So I would expect a lot of digestion here, down from 108.43 up to $9.73. all trading in here definitely keeps us just in a sideways posture. You can see that that was pretty much what this market's been doing for a while. So we'll see, but then remember, it has been a bull, so don't be too aggressive of a seller, especially as this market starts to get closer towards this 108 area. It may start to look at how it popped up the last time. So the next time it goes back and makes a run at resistance, especially if it makes new move highs, you know, hop, skip, and a jump, and you're up at 110 half, you know, no longer anywhere near this 109 area. So use caution if you're a bear. Now let's look at the Australian dollar, US dollar. We have a trade that's shaping up here. Just like we had a nice little formation going on in the Euro US dollar, we have a head and shoulders formation here in the Australian dollar US dollar trade. So a few sessions ago, this neckline was taken out. We have a downside target here of 66.80. Right now, this confirms this weakness is confirmed by strength in the dollar index. Strength in the dollar index will continue to put pressure on this Australian dollar, US dollar currency. And you also have to think that, regrettably, the fundamental implications of the wildfires in Australia and stuff like that will definitely have some sort of implication, I would think, on their ability to deliver exports and other things. It has to have some sort of impact on slowing their economy and their ability to provide products for even, you know, major countries like China that rely on them, especially if their production engine starts to kick up in full gear again. So we'll be watching this trend. Now, it looks like there's a lot of room to the downside. There's no reason to be that supportive of the Australian dollar, US dollar. So here's where we have some divergence in currencies now. We have the euro and also the Australian dollar that may, even if the dollar is weak, the US dollar may be very strong against the Australian dollar and even the euro for the next few months. I mean, there's actually a chance that the euro, if it takes out lower support levels down at 109, 108 half, that we start to really see a run where we maybe see parity in the dollar, US dollar sometime this year. This would take months most likely to manifest. However, if the fundamentals start to really drive these currencies like the euro and as well as the Australian dollar, because they have, you know, they have their own problems in their own countries, that this will start to cause weakness. So the dollar will get support just by default because the fundamentals will be driving the other currencies in that direction. So this is where technicals start to follow. They're definitely in place, and we need to follow them and use them, but there are some hardcore fundamentals that in the long term are going to weigh heavily on these economies around the globe as well as these currencies. So right now, we are looking at this trade to be continuously bearish here, at least over the next couple of weeks, unless we have a reason to get something like a buy. Like here would be the reason to change your perspective. If we were to take out this shoulder here and get a rally above this level, let me just make this a little clearer, and get a pop right here. Only trading above there would this rally forecast be off the table. And we may just go sideways. We may not hit this lower target, but right now it definitely is in a neutral to bearish posture. The slope has been pretty extreme, but remember the slope to get up to this head right here was very extreme. Markets go out like they come in. So it looks like this balanced out. You can see how we have almost symmetry where we're kind of at this phase here. So at least down to this level here, a challenge of this 67 half area, somewhere around here, it's very likely that we'll see follow through down to there. Maybe not this extreme head and shoulders target. This is the extreme long-term target for this head and shoulders if there's perfect symmetry as far as the momentum of the bearish move. But we don't know. For all we know, a dollar index could start to fall apart, and that would lift this some way. Maybe, I don't know. But like I said, I think fundamentally you have some factors here that are going to be driving this market much more than the technicals. Now we have the New Zealand dollar, US dollar, also in that trading zone. This one is looking like it's starting to manifest a little bit of a bottom here. So it may be riding support for another couple weeks. Who knows? But the overall trend is up. Most currencies have been falling versus the dollar all month. During January, this one has been pretty much sideways for the last 2 weeks, 2.5 weeks. It was only the first couple days that it really sold off. So right now we'll be keying off of that last low here at 65.79, this green pivot, and this last lower move high at 66.66. Any breach of this resistance here has us making a run for new move highs and shows that the bullish trend is back intact, confirming a higher move low, which is down here from a couple sessions ago. However, a failure from there at the 65.79 level has us testing critical support here, down from 65 double to 65.24, and any failure from there will have us at this big key directional pivot at 64.40. So we'll be watching this trade. It looks like if you are a breakout trader, there's some key pivots to look at, but right now it's trading pretty sideways. I don't know why, so I would right now I'd say wait for a move. And if you're a range trader, looks like you might have some success with it still for a little while. Now we have the US dollar Canada trade, which has had a nice swing move high and a nice little breakout to the upside. So what do we do with it? Well, I think overall, if the US dollar strength maintains, that this corrective move higher is going to continue to pressure resistance and make a run up towards this $33.27 level. However, if we were to fall back on support and take out this $30.30 area, then for sure the bearish trend is intact, and we're looking at making newer move lows and taking out this $29.52. Kind of a wide range trade here. There's no longer, it wasn't a range trade. Now we're looking to see if the swing continues higher or if it pukes out. So right now it's a little bit tough. We started with the bottom, and we had some very small here, lower move high, higher move low, higher move high, higher move low, higher move high. So the question is, are we going to find a higher move low now and then make another run at resistance? I don't know. It looks like right now dollar strength is carrying the momentum of this corrective move higher. The overall trend, remember, is a bear, so don't forget that. But in the short run and the medium term, it looks like this market wants to go higher. Now let's look at the US dollar Mexican peso. This is an interesting trade. Here we have a nice little bottoming formation that's happened over the past few sessions. A failure at 1866 would have us back on support and looking for new move lows. I would be careful buying into below here. This should be a key risk level. If you're long, be long against this. Do not be long below here. You're going to get hurt. This market overall is in a bear trend, and it is hitting some critical support where it has not seen in a while. We could see this market still down, get down to 16 pesos to the dollar in the next few months. So be careful trying to catch a falling knife. But short run, are bullish against this low and looking for higher move highs and a target of 19.027 pesos to the dollar. So we'll see what happens as this trade manifests. It's interesting, but overall it is a bear. So your trips to Mexico are going to get more expensive, especially coming from the US. Then we have the Turkish lira versus the dollar, which has an interesting little pattern setting up. It is a bull right now overall. It's had a nice little correction right now, and I think this is just a higher move low setting up for a challenge of resistance. So we're keying off this 590 level for the US dollar Turkish lira as our directional pivot. Trading above that will have us looking for a challenge of this 598 level, and a failure of this level will have us looking for a challenge of support down here at 583. So we'll see what's going on with that market. Remember, the Euro US dollar is the one to key off. This has a lot of economic numbers that are coming out this week. Most of them are medium range, but they still are impactful. A couple are big. And then we have the Brexit issue here as well. This one stands to lose the most now because it's losing the UK right at the forefront of knowing that it has a lot of fundamental woes coming out that they didn't know last year were going to be on the table, and we're starting off 2020 with issues with Italy. And, you know, once it starts with Italy, we'll see what other countries have some balance sheet issues as well. So that also means most likely that here's another thing you have to think about is the swap trade. So to go in line with this, you have to think that the euro or the EU is going to continue to suppress the euro and use quantitative easing measures over the course of the rest of this year. At least over the next quarter, because of the Italian woes and losing the UK, there is no way that they're going to be looking at raising interest rates by any means. So the swap trade, being short the euro versus the dollar, for instance, makes it more enticing because you know that the interest rate environment in the U.S., not that they're going higher, but it doesn't look like they're going lower. And definitely the euro US dollar looks like they're going to do a lot of quantitative easing and maybe even cutting, maintaining negative interest rates. So this, no matter what, is going to continue for the most likely scenario for fundamentals that you can look at. That's something you can most likely rely on. If that is true, then we're going to probably see the euro suppressed and hit support and maybe even make a run at parity with the dollar. It would take months for that to happen, so we'll see. But it's going to be very interesting to see how the EU absorbs Brexit and what's going on in Italy. These things could be just the beginning of a domino effect. So we'll see. For the market to get down to this, remember this target level of $1.931. Remember, it's only a dollar move for the right now. That's not that big of a deal. It could do that easily. We could do it in a session. Most likely, with the volatility it's had, it would take a week and a half. And that would be a nice bottoming area if the euro US dollar is going to stay in a somewhat bullish posture, if the strength is there. But it looks like that it's not happening for some reason. There's so many fundamentals that are just keeping the euro down. Like, to see the euro get a rally that's going to get it back above where this head was from this head and shoulders, let alone make a run at like $1.15 or $1.20 area this year, that would just seems like it's really not likely going to be happening right now. Not unless there is a big collapse in the dollar. You never know. Plus, remember, we have the trade war coming up with the EU and the US. This is going to weigh heavy on the euro. So we have a divergence in currencies. Swing trades are going to start to happen. Also remember your other cross rates, like your euro pound and things like that, your Swiss pound, your Swiss euro, and those trades. Which, here's another, since we're looking at the euro, let's look at the euro versus the Swiss. Remember, the Swiss is in a little correction versus the US dollar. Look at the euro versus the Swiss. This is like a rock. It is just falling, 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 falling. I wouldn't want to, I tell you what, you looking to buy this thing, I would be very, very cautious selling into it. Usually I don't like selling into lows on such an extreme slope, but this is if this is any indication of what's going on with the euro, let alone Swiss strength, then this probably has a big way to go yet. I wouldn't doubt if we start to see this get really close to probably, I would say, maybe another like $4 lower over the next couple sessions. Like the break that we've seen right now, this may be only half the distance that this slide is going to maintain, which is good for us for this euro US dollar trade. Remember, the best indication you can have of where the market's going is the market itself. And then with currencies, you have other cross rates that give you the best indication of strength in those individual currencies. We know that if the euro is weak against the Swiss and the dollar is strong versus the Swiss like it is right now, what does that mean? The euro has to be weak against the dollar. Fundamentally, that is. Whether it's going to manifest itself in the market, we shall see. But right now, it looks like the trade for the swap, for what the market the are going moving forward, as well as other pressures with other currencies and stuff like that, the trade is to be bearish to euro US dollar right now. So we'll see how this manifests and how the new week trades. So right now it's Sunday, and we have a few more hours before Asia and the rest of the market start to open their eyes for the week and get things going. So with that being said, we want to thank you very much for your time. Please subscribe to our YouTube channel at Forex Trading Unlocked on YouTube, and you can get our videos information where you notified when our videos are streaming live or we upload lessons or what have you. Any content that comes up, you'll know, and you can watch it firsthand, especially when it's streaming. And definitely please leave comments, and we will try to follow them up in our future videos. So definitely watch these trades that we talked about, and the euro US dollar looks like that's the one that we really want to key off of. So thank you very much from Forex Trading Unlocked. Check us out every day at www.forex-trading-unlocked.com.